Hi Aditya.
Hi, good morning, everyone.
Hi Aditya.
We have participants as well here, ready to hear all of you. So we'll begin the presentation. Let me just set the context, introduce both of you. Before that, I am Aditya Kulkarni. For others who have joined here, chartered accountant, 15 years in profession, working as founders across previous two organizations, and now leading the charter of partnerships and compliance in CashFlo. Uh, Today's overall agenda is the understanding of the journey of how trends has evolved. And to set the context up in the Indian landscape, I've seen compliance is driving growth also. We have seen this in the past when GST introduced. In 7 years, there is a tremendous growth. Now, in the last budget speech, the finance minister has emphasized that one of the pillars of growth is now an MSME. A lot was already done earlier. There were 45 days of payment terms, which was there since long. 3x interest penalty of the normal interest is something which was already in place, that if you delay the payment, you have to pay. In the recent change, government also introduced in the last year that the payment, if it is not made to MSME, the entire expense will get disallowed under an income tax act. And in the recent budget, the biggest change that got introduced was to increase the limit of MSME and define it as 500 crores. Now, with this, to infuse money in MSME, last year end, government also released a circular on registration of all those companies whose turnover is about 250 crores, uh, register them on TReDS. And if you're a buyer who have a turnover of 250 crores, you have to register it on TReDS. So in the today's webinar, our plan is to unfold what exactly TReDS is, what are its benefits, how it actually operates, works, and what cash flow is. So today with us, we have Ketan Gaikwad, who is Managing Director and CEO at RXIL. He have been an career experience of almost 30 years. And before to RXIL, he was in multiple leadership roles at Barclays Bank, at Standard Chartered Bank, and he started his career with Bank of Baroda. Tremendous and massive experience in the financing space and in trade finance, especially as well. I also have Ankur with me, who started his journey as CashFlo in 2017, and with a whole focus on managing and revolutionizing the business of payments and working capital. He was an ISB alumni, 15 years of experience with, again, a very strong financial services and technology background. And in his past, he has been advising on NBFC, supply chain financing, and their digital strategies while he was in BCG and JP Morgan. So I leave and start the dialogue amongst both of these panelists. And to begin with Ketan, uh, Ketan, I would love to hear from you about what exactly RxIL is, TReDS is, and just unfold the concept of whole journey in front of the audience. Over to you.
Thank you Aditya, and thank you Ankur and the team, CashFlo team especially, for arranging this wonderful session, and especially during the month of March because it is becoming mandatory for the corporates to join on the TReDS platform now, or if they are not registered, then you have to join. And it's very indeed heartening to tell about the journey about the TReDS, which has actually progressed over the last 7 years. I would love to take the entire people who are there, and I should thank all the people, also participants, for joining in the first thing in the morning on the last day of the month, which is supposed to be the rush day of the month for month-end closures and all that. So yeah, so I'll just take 10-15 minutes on the presentation, and then maybe I'll have pass it on to Ankur and Aditya for to taking it forward over there. So thank you again. So I'll just share the screen. If you can just tell me whether it's come on the screen now.
Yeah.
So here I'm talking about TReDS, the Receivables Exchange India Limited. So, Receivables Exchange India Limited was set up in 2017. 2016, the company was formed, and 2017 we actually went live with the transaction. So, the company was set up to handle the TReDS platform, and TReDS platform basically came into being because of the issues related to the delayed payments of the MSMEs and the delayed payments of the which happens when the corporates don't pay on the time. And when the study was done, I'll come to that. So I'll come to that. But yeah, to talk about more about RXL, RXL is set up by SIDBI, the premier financial institutions for MSMEs. And then we have a National Stock Exchange as a shareholder, promoter shareholder. And then we have State Bank of India, ICICI Bank, and Yes Bank as the other shareholders in the company. So the five shareholders are very important for us. So what is the problem which is being solved by the TReDS platform? The mandate. So it's a TReDS platform is nothing but it's not a private platform, but it's the government of India. I would say that promoted or very much interested in ensuring that MSMEs get the payment on time, and it's a regulated entity by RBI. So we have got a regulated license from RBI. So as a mandate is to solve the delayed, the challenge of delayed payments to the MSMEs by facilitating discounting at very competitive rates by digital process and using multiple financier models. So we have multiple financiers doing the bidding, and that's and at a and in a digital way. So why are we talking about threads and why this threads came into being? So when this study was conducted during the COVID times in 2020, the game is the mass entrepreneurship global alliance for mass entrepreneurship entity, which did the survey. They found that almost 10.7 lakh crore was the outstanding, on account of delayed payments, which is 5.9% of the Indian GVA. Out of that 10.7 lakh crore delayed payments, 8.55 lakh crores pertain to micro and small. Then you can imagine this amount is not about delayed supplies, but it is supplies which have already executed and the payments have not come to the rightful owners. So there's a vicious cycle, I'll just take a brief about it. How is this vicious cycle about delayed payments? So the vicious cycle starts with the buyers making delayed payments to MSMEs, which leads to the working capital crunch. And the working capital crunch actually ends up for the MSMEs to take high interest loans from MFIs because they have supplied, they have not got the money, and then they have to take high interest loans from the MFIs to run the company. And then the loan is a time consuming process. So that actually leads to increase in the cost of production due to high interest rates. And then when the high interest rates are there, there's a time consuming loan process, they are not able to supply the goods, the subsequent orders or whatever, then there is a delay in the deliverables. So the order requirements are not met. And you have unhappy buyers. And you also have unhappy buyers because of increased prices and delayed shipments and delayed payment. And that's the result, the delayed payment happens. Delayed payments actually lead to for the MSMEs actually ending up servicing the loans in a delayed way. That leads to the decrease in the credit rating for the MSMEs, and effectively increase in the prices. And this increase in the price actually leads to the negative impact on the GDP. So this is a whole cycle which has been depicted by the game people, uh, Global Alliance for Mass Entrepreneurship, and very vividly it tells you how the delayed payments is not a payment only related to that particular company or pertaining to that MSME, but how it actually affects the GDP. So what is the government doing about it? The government had implemented or has implemented something called as MSME Act, which talks about payments to micro and small enterprises within 45 days. Then the whole concept about started almost 10 years back in 2015, where they talked about setting up TReDS platforms, and then it mandated all the government entities to come on the platform. And now they have mandated in 2022 that all the government departments should come on the platform. And in 2024, they mandated all the corporates who have a turnover of more than 250 crores to register on the TReDS by 31st March 2025. So that's very important that now earlier there was a mandate to get registered in 2018. There was a mandate that all the corporates should get registered, but it was not a close-ended mandate. But now the mandate it is very clear that if your turnover is more than 250 crores, you should get registered as a buyer. So what is TReDS? TReDS is a marketplace. It's licensed and regulated by RBI. It enables the government entities and the corporates to enable to comply with the MSME Act and it's a multiple discounting platform. I would say that, multiple auctioning platform, and the payment MSME is received within 24 hours. So you have multiple buyers, you have multiple sellers. The seller might be selling to the multiple buyers, or the buyers might be, procuring from multiple sellers over there. Then you have the TReDS, the platform, and you have the financiers. There are three parties in the platform: buyer, seller, and the financier. So seller is the micro or the small MSME. The buyer is the large corporate or the corporate above 250 crores turnover has to get registered, and the financiers are the banks which are there. The banks, MNC banks, the public sector banks, and NBFCs and factoring companies should be there. So they all undergo a process of registration where they have to get onboarded. So KYC kind of due diligence is done on the buyers, sellers, and the financiers. So how does it work? So once they have got registered, that is the MSME vendor, the buyer, and the financier, once they have got registered on the platform, then the invoices, once they have between them, they have the goods and services contract between them. And then once the supplies have happened, then the invoices are uploaded on the TReDS platform. And once the invoices are uploaded, they need to be accepted. So once the MSME vendor has uploaded the invoices or the buyer has uploaded the invoices, it has to be accepted by the buyer or the seller as the counterparty who was to the party which has uploaded the invoices. Once the acceptance by the buyer is done, that's very important. Then the bidding happens. Then it becomes visible to the financier. Now the financier starts looking at the transactions or the invoices which have come on the platform. The beauty of this platform is that this MSME vendor actually is not the risk on the platform is predicated on the buyer's risk. That means if the MSME vendor is selling to a very large corporate or a very high corporate over there with the high on the credit grading, then the MSME vendor gets the rate or the financing rate as good as the corporate buyer. So there's a huge competition over this. So that's why the bidding happens. Why we say bidding is it's not the financing. At that point of time, the bidding happens. And once the bidding happens, then there is a bid acceptance. There are multiple bidding which happen. There can be some financier looking at the buyer on the other side, and he wants that particular invoice of it to be financing. Then he might quote it at, let's say 8.5% or 8.6%. There will be other financier will come and wants a transaction. He will bid it at 8.55. It can go down and down and down like that. So the higher the corporate graded rating, the lower is the cost to MSMEs. And once that is done, once the acceptance is done, either by the seller or the buyer, because it all depends on who is bearing the cost. If the buyer is bearing the cost, he has to accept it for the bid. If the seller is bearing the cost, then the seller has to accept it. And once that is done, an obligation is created between the financier and the buyer that on the due date they will pay. And the next day, the MSME receives the payment. So the financier gets debited and the MSME vendor gets credited on the particular financing day. So that means if the invoices are uploaded today, the whole day, the window's there till 9 o'clock. So the MSME vendor uploads the invoices get accepted by the buyer. And once it is accepted, it comes to the financier. Financier looks at it and does the bidding. And once the bidding is done, then the MSME vendor gets the payment on the next day itself. So that means within 24 hours they receive the payment, and on the due date the buyer is debited. So that means on the due date we do not wait for the buyer to make the payment. We have a debit authority or a NACH mandate which allows us to go and debit his account on the due date. On the due date you will say that what if the buyer does not have the payment? So buyer gets reported as a defaulter, or rather he gets reported as a overdue invoice in case it takes time for him to and it follows the same process as what the default mechanism is there on the proper on any other invoices or any other overdue invoices which get discounted, or any overdue loan which gets addressed to on in the normal banking scenario. So this is what it is. So what if there is a performance issue between the MSME vendor and the buyer? The guidelines very clearly say once the buyer has accepted the invoice and once the invoice is financed, so that means the buyer has to complete his obligation on the particular due date. Regarding the performance and all the other issues, that has to be taken outside the platform. So that means the buyer has to be very clear the performance has taken place. So there cannot be any leeway for performance issues on the platform. There are two types of processes. One's where the invoices are uploaded by the buyer, seller, and one's where the invoices are uploaded by the buyer. Where the invoices are uploaded by the seller and the invoice and the interest is borne by the seller, that the process flow is called as factoring process flow, where the invoice seller uploads the invoices, buyer accepts it, financier bids for it, and the seller accepts the bid because he's bearing the cost, and the fund financier then the disbursement happens to the seller, and the seller receives the funds within 24 hours. That means he gets the payment on the next day itself. And the buyer makes the payment, or the buyer gets debited, and the financier gets paid on the payment on the due date. Uh, and there are processes where the buyers want to give the control of the payments to the financier, to the supplier. So then what they do is that they accumulate all the invoices, and or in case there is an integration between the two platforms, so between the corporate buyer and the TReDS platform, then the invoices, the buyer can upload the invoices directly, and then the invoices get accepted. That the buyer uploads the invoices, the financiers bid for it, and then the seller, if the buyer is bearing the interest cost, then he will accept the bid, and the seller receives the fund within 24 hours. So this is the process where the buyer is bearing the interest and the buyer is controlling the funds payment when the seller should receive the. So what are the big advantages for the buyer sellers and the financiers? The MSME sellers, for MSME sellers, this is complete cash. That means on the due date, if the it is without recourse borrowing, so on the due date, if the MSME does not make the if the buyer does not make the payment, it is not the responsibility or the obligation of the seller. So this is the best thing which can happen. So just imagine whether you receive the payment after 90 days. If you receive the payment, in a normal scenario, you receive the payment after 90 days, after multiple follow-ups. You put it on the TReDS platform, you'll get it on the next day, or the third day, or the fourth day. But just imagine you getting the payment on the fourth day. That's the biggest advantage. That you can multiply that rotation of that money. It's quicker payment in 24 hours, lower cost of funds. Now this is the best thing about the TReDS platform, because the TReDS platform does not look at the seller, it looks at the buyer on the other side. So when the buyer is a very large corporate on the other side, then the MSME gets the advantage of the rate. So that means tomorrow if the buyer is a very high credit grade corporate, the bidding happens at the rate at which the corporate normally gets the funds, or sometimes even below that also. So that is the biggest advantage. And again, he's got the choice of multiple finances over there. The buyers, what we have seen is during the COVID period, this platform actually, became very popular because the MSMEs, because the buyers wanted to make the payments to the sellers, and they did not have any cash flow situation. And then that's where they used the payment mechanism over here, where they made the payment to the sellers, and on the due date or at an extended due date, they made the payments. So we have a lot of governments also availing of this facility. Again, this is again enhanced procurement terms which is there. But what we have seen is that the buyers are more popularly using the TReDS platform, because now just imagine if you have a supply chain program, and if a supply chain program, they always the corporate is at the mercy, because the corporate normally has a supply chain program with two banks, one being the primary bank and the second one being the secondary bank, where a small portion goes over there to the secondary bank over there. And now these two, three banks talk to each other and keep the rate at the way they manage the rate. But just imagine if they come on the TReDS platform, there's a bank sitting somewhere in south who does not have any exposure to you, wants to take an exposure on you, and they can give the limits over there, and the transaction can happen. So that is the biggest advantage. So more and more corporates are coming on the TReDS platform to avail of this particular opportunity, because they can use their limits, bilateral limits, for some other purposes, given that we have a large exposure circular also in the background where the RBI is concerned. And completely where we integrate with the we have the biggest team over here which integrates very fast with the corporate. So that is the biggest advantage. As far as the financier is concerned, this is priority sector lending. And again, they get access to very high quality customers, because you might not have access to that particular customer. So the biggest advantage for financier is to come on the platform, get introduced to that buyer, and then start doing the transactions. And tomorrow you might have that the buyer also enjoying separate bilateral limits with that particular buyer over there, buyer enjoying with that financier. Low risk of default. What we have seen is we have seen low risk of default on the platform. Over a period of 1,50,000 crores, which RXL has done, we have seen a default only in the region of 150. And I would say the clear default maybe in the 70 or 80 crores. So it is almost 0.01% of the entire transaction this thing. So that is the biggest advantage for the prime for the finances. And priority sector lending is something which is there. So if you see, if you are a buyer, how it is interesting. If you're a seller, it is very interesting for you because see, the financing which is done on the TReDS platform till now is almost 1,50,000 crores, which is totally amounting to US dollar 19 billion. We have financed almost 7 crore invoices, 7 million invoices on the platform, and we have the rate ranging from 7.5 to 8.5%. So just imagine if you are a seller, if you are doing the financing at the rate, and this is a very competitive rate on which the financing happens. Tenor financing is from 1 day to tenor financed from 1 day to 180 days, and we have invoices amounting from 100 rupees to 23 crores of rupees, 23 to 22 crores of what we have done. So last month, till the last month in January 2020, January 2025, RXL in this particular year has done almost 62,000 crores, and we are targeting that we should be doing around 80,000 crores this year compared to last year's 46,000 crores of financing. So we see that more and more corporates are adopting it. They're not just not registering, but they're also getting, coming on the platform to get, start the transaction and test the waters. So we have till now covered 35,000 MSMEs. We have 1,900 buyers. We have 72 financiers. So financiers are very keen on doing transactions. Very good quality corporates. They're very keen on taking the exposures. And we have almost 1,600 MSI, cities from where the MSMEs and the corporates are covered. It's a digital platform. You don't have to have presence. So that doesn't mean that we're sitting in the 1,600 cities in all across India. But this is a digital platform where all the MSMEs and the buyers come in. Impact on the MSMEs, we have 55% MSMEs coming from Tier 2 and Tier 3 cities. 85% of them are, onboarded are micro and small. And of that, 10,000 MSME entrepreneurs are women, and invoices discounted, I told you, that is from 100 rupees to 22 crore rupees. And again, to touch base on what Aditya mentioned about the revised classification criteria about, micro, small, and MSMEs, the turnover and the investment going almost 5 times, or the turnover also, the revised turnover also coming into the picture. So 2.5 times, and the turnover going to almost 500 crores. So if you are an MSME up to the turnover of 500 crores, then this is the best advantage for you to come on the TReDS platform and enjoy the benefits. So this is what it is, and we also have the digital onboarding process. So the processes which used to take almost 2 to 3 hours now takes almost 15 to 20 minutes for the MSMEs to get registered. For the buyer, it takes a little bit more time, but yeah, given that it is mandatory, we request the buyers or the participants who are coming from the buyer side to get registered and be on the as per the government initiative or the government directive. Yeah. So with that, I close my presentation and hand it over back to Ankur and Aditya.
Thank you. Thank you, sir. Uh, I think there are few questions, but let's take all the questions at the end. I would ask now Ankur to quickly brief on what cash flow is and maybe how cash flow fits the bill between all the trades journey. Over to you, Ankur.
Yeah, no, thank you, Aditya. Thanks everyone for joining in, and thanks Ketan for for talking about TReDS and how it works. I think particularly useful at this point in time, given where we are in the journey. Very quickly, we'll explain to the folks, talk a little bit about cash flow as well. We at CashFlow are essentially a multi-lender, multi-bank network of multi-bank network that essentially helps companies enable trade finance. And of course, TReDS is one of the key sources of capital that we leverage when it comes to financing the supply chains. Overall, as a company, we've built a full suite of payments, enterprise payments, and finance automation solutions. Trade finance, of course, is one of them. And across the entire product suite, we today handle on a monthly basis, north of 20,000 crores of invoices that flow to the platform. and we work with north of 1,200 odd corporates. We have an SME network of 3 lakh SMEs and growing fast. And one of the sort of core value propositions that we've been enabling for our customers over these years is how do you enable vendor financing, where like Ketan mentioned, as a buyer, how do you get an extension in your own payables while your suppliers can get access to early payments? I think that's where Cashflow has been playing an integral role with some of India's leading corporates. Aditya, if you can maybe, yeah, just perhaps stay there. Uh, Sorry, next slide. Yeah. So, one of the things that Cashflow helps enable for a lot of the companies is today, if you think about the normal process that a buyer and seller follows, let's say a buyer has a certain credit period of 45 days with their sellers. And, if they have to make any kind of an early payment to their seller, they have to negotiate a cash discount with those sellers. And typically, the procurement team has to do that cash discount negotiations on a seller by seller basis. And a lot of companies have standard cash discount policies, but we've seen they struggle to sort of scale those. Only a handful of vendors typically avail of those policies. Um, and whenever buyers are running any kind of vendor finance programs, including TReDS based programs, usually in our experience, buyers leverage this to, like Ketan said, pay the suppliers. Let's say on day 45, and in turn the buyers can extend up to day 180 as well. One of the things that today companies struggle with is, on one hand they get access to the capital directly or through TReDS, but if they have to make any kind of early payment to their supplier, they still need to negotiate the cash discounts manually, and that can be a very cumbersome process, and it doesn't really scale well. So, at Cashflow, one of the core modules that we have deployed over these years is an early payment solution that integrates with TReDS at the back. It integrates with multiple banks. It also leverages buyer's own treasury from time to time, and essentially use all of that available capital to deploy that towards their suppliers in the form of early payments. Now, the challenge typically comes, is that, every supplier is, running their own business. They have their own working capital cycles. So it's not, that the supplier needs the money on day one all the time. The supplier might need money anywhere in the credit period, right? Whether it's day 1, day 20, day 40, so on and so forth. So as a platform, what we've allowed the suppliers to do is essentially come to the platform and place an early payment request or a discounting request on any of the days in that credit period, right? So if look at the schematic here, let's say the original credit period was 45 days. Now the supplier can, in this example, the supplier is coming on day 21, and he can place a request to discount his bill for just the balance, 24 odd days, right? Um, Now, this is a fundamentally game-changing value proposition for buyers and sellers. The reason being, cash discounting typically would happen on day one of the process, right? If an invoice gets booked, immediately the supplier gets paid. Now, the problem is not all suppliers need that money on day one. So here, this facility acts almost like an on-demand, working capital line for the supplier on any day of the year, whenever they log into the platform, whichever buyers are already there on the platform, they can simply select all their invoices against these buyers and liquidate them, and they get the money the following day, right? So instead of having to negotiate with each buyer, instead of having to sort of, discount the bill on day one for every single invoice, now the supplier has the ultimate flexibility to decide how much money they want, when do they want it, and at what rate are they willing to, discount their bills, right? So I think that's our entire idea here has been, create a level playing field between buyers and suppliers. allow both sides to, collaborate together and create a win-win scenario where, both parties end up benefiting. So, that's something that what it does for the buyers also is that it removes the pain and the friction working with their procurement teams or, the finance teams having to reach out to the suppliers. The cash flow platform and our entire program management team takes care of every single supplier engagement and enables buyers and suppliers to collaborate for early payments through cash discounts. The other thing that we enable is, of course, TReDS is a massive funding source for companies, and it's been doing exceedingly well. A lot of customers also want to secure capital for their non-MSME suppliers, and that's where we have our network of 20 plus banks and NBFCs that we leverage to enable payments to even non-MSME suppliers and in the process capture cash discount as well, right? So that's, at a high level, the role that cash flow plays. If you look at the schematic here, this should give you a fairly good understanding of cash flow's role in the entire ecosystem. So any company today, let's say a 500 crore company or a 200 crore company or a 1,000 crore company also, if they want to enable financing for their suppliers and also get their own working capital benefit, what they typically do is, they integrate with our platform, our cash flow platform. Through this platform, we enable, essentially it's a payments platform, right? So we enable payments to all their suppliers. These could be regular due date payments, it could be advance payments, so on and so forth, and of course, early payments as well, right? So for a company, they have a single window where they can handle all their payouts to their vendors. And they can leverage multiple funding sources as well. Let's say, a company needs to make 50 crores of payments in a given week. Now that, part of that 50 crores might come through their own internal accruals, through treasury. Part of it, they get access through TReDS, like Ketan was mentioning, RXIL has a large base of lenders at the back. So, TReDS can facilitate access to capital. And of course, the company might have other banking relationships today, which they're using for their working capital needs. So cash flow essentially unifies all these different funding sources, and it becomes a single window for a company to manage that. And at the same time, for their suppliers, Cashflow offers a vendor portal where the suppliers can essentially track their invoices and their payments, and the suppliers can also request for early payments. And that's where our own proprietary pricing engine comes in, where we identify what the right discounting rate should be between a buyer and supplier, right? So net the effect for the buyers here is that one is, of course, they get massive support on working capital. They can extend their payables up to 180 days, and they can get it extremely attractive rates, 7.5% to 8.5% typically, like Ketan was mentioning. But on the other hand, the buyers also, through cash flow, get a guaranteed 2% subvention or 2% cash back, which we enable through the early pay mechanism, right? So, in effect, if you imagine a buyer whose cost of capital is at 9% and they're using that line, part of that line to deploy, in the form of early payments, their effective cost of capital can actually come down, by another 2 to 3%. Right. And that's, where, true value starts getting realized, where suppliers also get access to low cost funding and buyers also end up, sort of getting automated cashbacks by way of cash discounting. Right. So at a high level, that's sort of a quick summary of what how Cashflow enables supply chain financing, especially in context of TReDS. I'll pause here, Aditya. Over to you if you have any follow-up thoughts.
Yeah. Thank you, Ankur. I think broadly we have, amongst both of you, have summarized how TReDS has evolved of how CashFlo also has a role to play at both the ends. We would open the floor on the questions. Most of these questions are quite interesting that I'm going through it. Let me moderate these questions for you, and I would request you to quickly run through. I'll ask these questions on behalf of the audience, and you can quickly answer. There is a first question. Some of these are very compliance-driven questions, Ketan. If you can help us answer a few of them, like strictly, what's the definition of turnover? If someone is asking whether 250 crores, the definition is different as per Companies Act and MSME is different. Do you want to take the answer on this?
So ideally, I would say that it's the revenues. So if you're making a turnover is nothing but revenues. So whatever revenues you're making, I think which comes in the balance sheet, the top line. So that's what is looking at. So 250 crores is the level revenue. If you're making 250 crores on our revenue, then you should be coming about 250 crores. You should be coming on the TReDS platform as a buyer.
Good. And is there like a specific penalty? There is one question about not registering before 31st of March. I think we all as
I,
Indians
it's a,
would
it's
love
a,
to get this.
it's a gazette notification which has come. So it's up to the companies to comply with or not. Normally, Indian psyche is very clear that last महीने तक देखा जाएगा क्या करना है बाद में extension तो आना ही है. But like the 43B, they never extended it. They might not extend it. But yeah, again, you will get it's from the compliance point of view, you might get a question from your from MCA, Ministry of Corporate Affairs. Again, I'm just saying that they might ask that, can you please confirm whether you got registered? Regional MCAs might, ask you. That's what I will.
Right.
That's what they had done long back also. But I'm not sure about it now, what will be the penalty or whatever it is, or whether they'll really get a call also or not. That's something for the government to decide.
Sure. Understood. So some questions on the operational level, I could see, does buyer really has to register on the platform? I think you have clarified it, but just for the benefit of those who have again asked this question, without buyer being registered, I guess RXL doesn't work. Do you want to repeat it again? For the
Yeah, so the
benefit?
buyer, it's very necessary that the seller, just getting the MSME as a seller to get registered on the platform is not enough, because the respective buyer also has to be registered, because acceptance from the buyer for that particular invoice is very important. Basically, after that only the financier will bid for it. If the acceptance is not there, then the transaction will not happen. The buyer is not there, the transaction will not happen.
Right. So both parties have to be active, approving from both the ends. Even if supplier is uploading, buyer has to approve it. That's how the
Correct.
strategy works. There is an interesting question. In case of a default, the whole concept of RXL and TReDS is to get an access at a lower cost of capital. And default can be, an exception for any business. But will there be an impact on the interest rates going forward in future if the default is made? It's an
It,
interesting
it,
issue.
it is very simple, right? If you are take a personal loan, if there is 1 day delay or 2 day delay in your payment of EMI, your credit rating goes down, isn't it? And this is completely tied up with the credit rating. So if a credit rating goes down, obviously there will be a impact on your cost of borrowing, right? That goes for your personal experience also. So that it's the same thing applies to even the corporate also, right? If there are defaults or if there are any delays, see delays up to 2 or 3 days due to certain reasons of technical or something, the banks understand it and they'll take overdue interest for that. But if it is goes below that, above that, then there is a reporting mechanism of SMA 0, SMA 1, SMA 2, and then NPA. So these things have to be followed, and the banks are following it up very quickly over there. So no corporate actually thinks about delay whenever it takes any loan, isn't it? Unless the corporate wants to willfully delay or default. Due
Sure.
to some unavoidable circumstances happen, maybe that point of time, yeah. But again, if there is a delay, then there is a credit rating default also. Credit rating might go down.
Sure. One more clarity, maybe if you would want to give a few questions that I can see about collaterals. would MSME or buyer has to give any collaterals to get the lines? Would you
No,
like
this is
to explain?
completely, that is the best part. This is completely unsecured. So in the sense, see today, tomorrow, today, if a MSME go or the seller goes to his bank and says, I want to do a bill discounting, he will not get the facility of a bill discounting till he has given collateral or unless he's a very big buyer, something like that. So if he's given the collateral, that he'll give the limits for the doing the discounting. Again, that discounting again dependent on the collateral which is given. At the same time, if the tomorrow if the buyer does not pay, he has to pay. That means it is a with recourse facility. But on a TReDS platform, if the buyer has accepted the invoices, then it is not the seller's responsibility. It is complete cash for him. It is it is as good as he has got his cash and discounted, and he's got the money now to run his company. And tomorrow, if anything happens with the buyer, is the buyer's responsibility. As far as the buyer is concerned, again, no collateral. It's an unsecured loan, unsecured mechanism. So there is no collateral to be taken at that point also from the buyer.
Understood. And of course, as RBI mandate, we understand there are multiple TReDS platforms. One of the question is, what if the buyer is registered on another platform and the seller is on another? How does that work?
So see, look, earlier there was a problem about this, but now the buyer is registered on any other platform. We're trying to work on where the interoperability can happen. But look, the registration process has become very simple. So it's not so cumbersome. Within 10-15 minutes, the seller can get onboarded. It is so simple. Where earlier it used to take time of 2 to 3 days and all now whatnot. And now it has come down to, half an hour or 15-20 minutes. If the customer has supplier has all the documents, it is 15-20 minutes. So he can, get registered on the platform and if he has the invoices, then he can get it done. And normally the buyers prefer that the seller also should get registered on the same platform. So they
Yeah,
tell seller that you please come on this platform where I'm actually registered over there, so to have a proper control.
understood. Uh, Ankur, there is a question for you. There is, can you just give a broad construct on how exactly do you mean by 2% cashback, and could you just explain it in a little more depth? That's someone who has this. You're on mute, Ankur.
Yeah, am I audible?
Yeah,
So the idea is very simple. I think today a lot of the companies, the way they leverage TReDS or any bilateral, reverse factoring lines is, to comply with the MSME payment requirement, they will make the payment to the supplier on day 45 and extend their payables up to 180 days. Right. And in this way, the suppliers get access to timely payments. They know that on day 45, money will definitely land in their bank account, and the buyer essentially gets an extension up to 180, right? Um, Now, what cash flow enables here, which is over and above, what, let's say, a TReDS platform does or what various banks offer, is an option for the buyer to let the supplier take money before day 45, right? So before the due date. Now, when through our platform, what we do is we enable this early payment to the supplier, where the supplier essentially can log in and at their own option, at their own choice, discount a bill anytime within the first 45 days, right? Now, supplier one may come on day 10, supplier two might come on day 15, supplier three might come on day 25, so on and so forth. And then they discount their bill at their own choice. In fact, what CashFlow here does is, we enable some kind of it's not it's similar to an auction process where a supplier can essentially bid for an early payment. Right. So just like banks are bidding to finance the buyers at the lowest possible cost, suppliers are also bidding to get access to early payments because the buyer only has let's say 10 crores available to make payments to their suppliers before due date. How do you decide which supplier should I pay before due date because I only have a limited amount to give out? And so that's where, our platform helps the buyers, figure out which supplier needs the money on which day, and, what is the discount the suppliers are willing to pay for it. And the aggregate result of all of this is, and obviously different suppliers have their different cost of capital. Somebody might want to discount at 8%, somebody at 9, somebody at 10, somebody at 11, right? But the aggregate benefit of all of this is, as a platform, irrespective of what rate the supplier might want to discount at, we guarantee that the buyer will get, on average, a 2% cash back, right? So that's a commitment that we give to our customers, that we will run this entire process for you. We will manage your entire supplier relationships, and we will drive awareness among the suppliers. And whichever supplier wants access to early payments, we will facilitate it in a fair and transparent manner. And in the process, enable a guaranteed 2% cash back to the buyer, right? And that's how we sort of create incentive for the buyers as well to make early payments before due date, right? Otherwise, of course, the suppliers will continue to get the money on due date and buyers can extend it. But this becomes an added advantage for both buyers and sellers.
Understood. Super. Um, Overall, the questions are around which type of financials are on TReDS as well as CashFlo, or what type of financials that you can bring them access to. So the question is to both of you. Could you just help give a clarity on what's the scale and what type of supply lenders that are there on the platform? Ketan, would you like to do or maybe
So
few of them?
financiers are branch of, the public sector as well as private sector banks. MNC banks are not so much, but yeah, some banks are there. So we have almost 17, 60, 70 financiers. Uh, Public sector, private sector, all public sector banks are there, private sector banks are there. And we have factoring companies also. Now NBFCs are also coming in. So almost we have a whole array of bankers and financiers on the platform. Because this is completely PSL, priority sector lending accredited. So, so that's what it is.
Understood. Got it. Ankur, do you want to add anything more here?
Yeah, I think from what we at CashFlow do, of course, we are connected with the various TReDS platforms at the back, so there is seamless integration available there. So any company that wants to leverage TReDS, there is, we offer a single window access, to get funding through TReDS. But in addition to that, even for the non-MSME suppliers, we have a network of lenders that already are there, which, of course, the private sector banks, I think most of the top 10 private sector banks are there. 4 to 5 of the large public sector banks are there. And then about 4 to 5 MNC banks are also present for participating on the platform to even cover the non-MSME base, right? So from if there is any company that's looking to fundamentally solve their entire, working capital problem overall, I think there is a very elegant and a very beautiful solution, that becomes available to them now, where, they get access to low-cost funding through TReDS for their MSME suppliers. They get access to additional capital, working capital, again, at very competitive rates, for the non-MSME suppliers through CashFlow. And, they can enable early payments to suppliers and enjoy, subvention, while, their own credit period is extended up to 180 days. So any company today, who faces working capital challenges, to my mind, it's a no-brainer, for them to register on TReDS, to register on CashFlow, to really extract the full benefit that the financial ecosystem has to offer.
Got it. Ketan, this question is to you. While we are talking about certain NBFCs that are there on the platform, there is a question which asks that they are not currently involved in the factoring business, and how can they avail the benefit of TReDS platform? Can they register on TReDS? I don't know if this question is as a lender or it is as a buyer, but maybe if you want to answer both.
So coming on the platform itself is, began doing the transactions itself is factoring. So the transactions which are done on the TReDS platform is factoring. So you get registered and you can start doing the factoring businesses on the
As a
platform
buyer, you mean,
as a
or as a
buyer,
lender?
as a financier also.
So as a financier, if they want to start the business, uh, what could be the journey?
So financier as of now, I would say that there are three types of financiers which are allowed on the platform. Banks, scheduled commercial banks, which includes private sector, public sector, MNC banks, and factoring companies are allowed, and NBFCs are allowed. Now, NBFCs are allowed to the extent of non-dip. So there are three conditions which are there. The net worth should be more than 5 crores, asset value should be more than 1,000 crores, and the three conditions are there. So that condition is fulfilled, it should be a non-deposit taking NBFC also. So these conditions, then you have to apply for RBI for them to do it. It just cannot be as any financing company which can come on the platform and start doing the transactions. So it has to be the companies which are, or rather the financial institutions which are approved by RBI to come on the TReDS platform, or which are allowed to come on the TReDS platform and do the transactions.
Understood. A very interesting question. What is the time that you should generally spend on someone, and it's an experience that probably you can share, or as a buyer, how much on an average time is required to
Not much.
work?
So basically, till the time the implementation is done, assuming that if it's going to be a SAP integration or the integration with an ERP, that's the only time which is going to happen. Otherwise, all the transactions which get authorized by, in fact, we have seen since the digitization has happening, in many other treasurers are very interested to come on the TReDS platform because it allows them to, remove the people who are managing the payments on the other side. Reason being because there's a lot of efficiency they see in the terms of logistics because it's completely digital. Invoices come on the platform. Invoices they get presented from the buyer side on the platform, and on the due date they may have to make the provision. So all the reverse entries also go directly to the SAP system or whatever. If it is done manually also, it is not much time which is taken. It is just the authorization for them to do it, and it's completely digital. So it's not much more than share trading market, whatever it is. So you have to just your invoices come in, you have to accept it. If the GRN is accepted or whatever, depending on your conditions of your company, and once set up by a company that you have to accept those invoices. Once those invoices are accepted, then nothing on the payment goes to the supplier, and the reverse feed comes to you, and on the due date you get debited for that particular amount. So not much time is spent. Though in the initial time, in the initial days till you get familiar, it does take time, which is natural.
Yeah, yeah. Some of the sub questions around foreign payments, I think it's very clear. We
It's
as
local.
friends, yeah, it's local. It's MSME, so it doesn't cover any imports. It doesn't cover any exports. It's purely a local MSME supplier procurement. For there are 5, 6 questions around this, so let me clarify it. Uh, who does the SAP integration? I think this is also answered by you. It's
Yeah, SAP
but
integration is done by the RXL team along with the company with whom we do the work. So basically, the IT department of the company should be very quick and perceptive in getting the SAP integration done. Because the company might be interested, but the department might not be so keen on taking it forward. So it is all about the receptivity of your IT team also.
yeah. Yeah. Uh, all right. That's about it. Uh, I think most of them would think of first registering it on the platform as buyers. I am just flashing the screen for benefit of everyone. You can, connect with CashFlo. We would help, of course, we and TReDS work very closely, and we would help you get registered on the platform. There is a question that, that is floating around 2, 3 ones who are asking, do we really need to draw the money, or is only registration sufficient? A piece of advice from both of you to this question to end this seminar.
See, registration. See, for compliance sake, you can get registered, but I would say that it's better to get registered and see how it works. And when you see it works, we guarantee you that you will not want to go back to your normal discounting method. So you would want to stick around because you discover the prices also. There's a price discovery mechanism also. So you can discover at what rate my invoices can get discounted. And that's very important in today's world where the treasurer is very keen on how do I reduce my cost. Sometimes it is much effective or much more beneficial than even a OD facility or a working capital facility which is done from a bank. And that's why it's ideal to get registered and maybe do some transactions and then see the benefit. If they don't see any real benefit, then there is no need for them to do the transactions also.
Right. Ankur, from your end?
Yeah, look, I think Ketan covered it. I think registration is a no-brainer for any company. There is really no downside to it. In our experience, what we've also seen is that companies, even in case of a lot of companies who say that we don't need money right now, right? We have enough working capital. So I think that's where we play a role in sort of advising the companies and working with them to help them extract maximum value from from TReDS, for instance, where let's say they might have 10, 20 deploying the money through early payments to their suppliers. Getting on the bank side, with CashFlo, you will see what discount rates are getting on the supplier side, right? And then it's up to you as a treasurer or, as a CFO to decide what's the most optimal, solution for you, right? And then move ahead accordingly. I think in our own experience at CashFlo now, we've been working with 50 of Fortune 500 companies in India. And not one has ever sort of come back and said, this is not useful for us, right? So I think it's a matter of taking that initial effort, registering, and then experiencing the platform.
Sure. Thank you so much, both of you, for your time and sharing your experiences and principles on TReDS. I think my screen is shared. Just confirm, Ankur, once if you can
Yeah,
see
Yeah, we
it.
can see
If you
that.
can,
yeah.
so please reach out to these numbers. We would help you get registered and make you compliant first. And as both of you have said, more than that, I think compliance will help you, drive your business better. Do test it. Thank you so much again, everyone, for joining in. We look forward to connecting with you all separately in coming days.
Yeah.
Thank you.
Thank you.
Thank you, Ketan. Thanks everyone for joining in.
Thank you, Aditya. Thank you to the participants.
Thanks.